Hi everyone, Andrew Ienna here. Joined with me is Chris from Mortgage Choice. Welcome, Chris.
Thank you for having me.
Okay, guys, we're here to talk about three things, so let's get straight into them. Interest rates, the new first home buyers grant, and a little bit about lending and self-managed super funds.
Yep.
Okay? Of course, guys, everything is subject to you getting your own independent financial advice. We've got to put that little disclaimer there. Let's go. Interest rates. Chris, you're in the world of mortgage finance. What's your prediction between now and Christmas?
I don't think that they're going to move the rates at all. I feel like they're going to leave them as they are. I think there was a bit of controversy on the last one. A lot of people expected it either to go down further or a few more times. The RBA have made it clear that people are spending a little bit too much, to put it simply. So I think they're going to leave it the same just to maintain the status quo a little bit longer so that people sort of understand to curb their spending a little bit, which will help the market in that way. So if the RBA doesn't increase or decrease the rates and leaves them the same, what would that do for the real estate market?
At the moment, the market's on fire. That's just a simple way to explain it. There is many more buyers than what there are sellers. So, yeah, look, I actually think they're going to decrease the rates in November. Let's see. We'll certainly see. But long story short, Chris, what it means for the market is whether they keep it the way it is or they decrease, the market is just on fire. Let's cross over now to the next thing. First home buyers grant, effective 1st of October. So there's obviously some key points. Guys, please make your own inquiries, but this is how we interpret it. So it used to be, I think, $900,000 cap, whereas now that's increased to?
1.5 million.
Yep. I believe it was previously a limited amount of places. It's now
Unlimited.
And geez, we do good together, don't we? And also 5% deposit, right?
Correct. And no income limits is the other big one.
Oh, don't forget, no mortgage insurance.
Correct.
Yeah, that's a massive one, right? That is huge. So no lenders mortgage insurance. So tens of thousands of dollars potentially being saved. Massive. How's that in your world? Like I guess 1st of October is when it all kicked in. How's that affecting you guys, pre-approvals, your clients' inquiries?
The biggest effect it's having is the timeframes with the banks. So especially if you're going to an auction or an open home and you want to know that you have the finance ready in advance, what used to take 3 to 4 days, maybe 10, one of the banks was a little bit longer at 10 days, is now taking up to 15 days because of the inflow. Now obviously some banks are a little bit faster, but I'm talking worst case. Because of the inundation with the scheme upgrading all the price caps and the income levels and all that from 1st of October, the rush of new clients coming through, those timeframes have been delayed. So if you're planning on going to auction or open home or something like that, get in early with myself, for instance, and get the pre-approval started so that it's ready well in advance.
Yeah, I couldn't recommend that enough. Getting yourself pre-approved, completely ready, all documentation provided to your broker, getting it all ready to go. These guys shop you around, get you the best deal, best facility as well, because the loan can take many different shapes, important parts of it, but then being ready. But in terms of the market, we've seen the market, man, like pretty much definitely anything under $1 million, but even anything in the early 1.1, 1.2, 1.3. The last couple of weeks, we took a couple of properties to auction and they just went crazy. It's been really, really good. There is another side of this as well, honestly. It's the young ones trying to get in on the market. Our recommendation, try to have a talk to your mortgage advisor, Chris, in relation to can we use equity on another property to help our sons or daughters get started, right? Because every year you leave it, you're potentially losing them tens of thousands of dollars in capital growth, and potentially the market is just harder and harder for those poor people to get into. These young ones, we want to get them started. We want to get them in the market, but it just gets harder and harder each and every time the market goes up. Have you got some cash reserves? Can you help them out? Equity in their property? Speak to someone like Chris here from Mortgage Choice. Quickly, self-managed super funds.
Yeah, it's just another one to add on to the last point of getting in early. We're finding a lot of clients actually doing purchasing property in their self-managed super funds as a family. So you're allowed multiple people in a super fund.
Up to 4 members?
Self-managed, I believe it's up to 6.
They've changed it. Used to be 4. Okay, great.
we'll fact check that one. So yeah, and you can start the journey a little bit earlier, obviously with the right advice from your accountant or financial planner. But it's a way to get into the market as a family and boost from the parent side and the children's side. Everyone gets a benefit from it. But we're finding a lot of people are either doing that or just purely running out of borrowing capacity in their personal names and buying property in their self-managed super funds because the banks keep it separate. So you could be fully maxed out borrowing capacity-wise in your personal name. Your super, when we put it through to the banks, they ignore what's in your personal name as long as that you meet the criteria in the super fund.
All right. If you have any further queries on any of this, please contact our office on 9678 1666, 9678 1666, and definitely I can put you on to the right person. I can give you Chris's details, etc. So, or myself if you're considering selling. Dennis as well, he's here as well. Thanks guys, take care. Thank you.
Thank you.